Macro state of crypto, where it has been and what's next. Analytics can offer insight into how recent and past crypto and regulatory events have affected prices and movement. Plus, a quick Q and on retirement funds. Last week, a U.S. judge ruled that XRP is not a security, and the SEC accepted the BlackRock Bitcoin ETF application, moving it to the next stage of the approval process. Within minutes of this XRP news, the token jumped from 45 cents to 61 cents, pushing the price up over 25%. While these decisions and the many more coming led to even more regulatory questions, it is clear that rule changes are a significant factor in digital asset volatility. As an advisor on digital assets, you must consider how current regulatory events and recent failures affect pricing and trade volume for Bitcoin, Ether, and altcoins. Below, Greg Magadini from Amberdata takes us through crypto and regulatory events and provides some analytics on how these events impact prices and movement. Also, can we include crypto in retirement funds? Thanks to Brian Kirchis from Dame for answering this week's questions on the topic. You're reading Crypto for Advisors, CoinDesk's weekly newsletter that unpacks digital assets for financial advisors. Subscribe here to get it every Thursday. Macro state of crypto, where it has been and what's next. In 2022, Terra Luna's collapse, the crypto hedge fund 3AC's bankruptcy, FTX's scandal, and other meltdowns pushed the industry into a bear market. These headlines drove the entire sector lower, often led by altcoins. However, the first half of 2023 flipped a lot of these crypto relationships on their head as macroeconomic events splashed news headlines. Bitcoin led crypto higher in January as the Fed's hawkish narrative began to soften. This move was accompanied by a positive spot/fall regime, with traders buying options as Bitcoin rallied, a relationship not witnessed in 2022 when only price crashes seemed to drive volatility higher. The takeaway was that Bitcoin was trading on fundamental macro news as opposed to crypto-specific events. If Ethereum is a crypto technology bet, Bitcoin is a monetary alternative pure play. YTD performance of BTC Orange and ETH Blue. This narrative juxtaposition became obvious in March as the SVB banking crisis took hold. Comparing the YTD performance of BTC and ETH spot prices, we can clearly see that BTC began an outperformance of ETH in reaction to the banking crisis and the Fed's emergency response. BTC has been able to hold onto this outperformance ever since. YTD ratio of implied volatility ETH D-vol divided by BTC D-vol to see further evidence of a shift in these trading dynamics, a move towards macro events, and a shift away from crypto-specific news we can observe. The forward-looking option market activity. The ratio of derivatives D-vol indexes, a comprehensive 30-day to maturity measure of option implied volatility. Think the VIX of BTC and the VIX of ETH shows us that the typical implied volatility premium of ETH over BTC began to dissipate in reaction to macro news events. In mid-January, we saw a market adjustment from the Fed beginning to slow down its hawkishness. This sent BTC higher and BTC Roman 4 implied volatility relatively higher. Chart goes down. Then in early February, we saw major outperformance linked to the Labor Department's monthly non-farm payrolls NFP number. This quickly killed the idea of a Fed hawkish slowdown. BTC dropped along with gold and other interest rate sensitive assets, and BTC Roman 4 went down relative to ETH Roman 4. Chart goes up. The SVB crisis again nudged BTC Roman 4 higher, only to be temporarily paused by the ETH Shanghai upgrade. Today, ETH Roman 4 trades around parity to BTC Roman 4, even briefly at a discount. Where does this leave us for the second half of 2023? The Fed remains in a wait-and-see mode after recently doing a rate skip at their June FOMC meeting, although other central banks continue to raise rates. The U.S. macro picture is moving into the background as crypto-specific news events become top of mind. The regulatory events surrounding Binance, Coinbase, and XRP are becoming major drivers of activity. Today, BTC is defined as a commodity, while ETH's categorization is more ambiguous. This means there's increased sensitivity for ETH's technology bet narrative around regulation. A lot of ETH's value comes from its utilization and the various DeFi, NFT, and ERC20 protocols built on top of the Ethereum infrastructure. Lately, volatility surrounding the Consumer Price Index CPI, NFP, and other macro events seems to have settled down, while regulatory clarity around crypto, a potential spot ETF approval, and the XRP resolution is becoming a key focus. This paradigm shift could lead the market towards higher beta altcoins in the crypto space. Historically, altcoins have outperformed BTC in bull markets, and the second half of 2023 is off to a bullish start, so far accompanied by mostly favorable crypto-specific news headlines. That the recent events have increased ETH Roman 4 relative to BTC Roman 4 offers a hint that option traders are also paying attention. Greg Magadini, CFA Amberdata, Ask an Advisor. I help clients include crypto in their retirement accounts. Brian Kirchis, CEO Dame. Keep reading. BlackRock's Bitcoin ETF application was accepted by the SEC, moving it to the next stage of consideration. Dan Moorhead, Pantera Capital's founder, predicts it's time to rally. The bull market is coming. With over 10,000% returns on their crypto hedge fund, Dan has my attention. Can you believe the naysayers have now declared Bitcoin to be dead over 474 times?